We are discussing economic substance regulations, and we are discussing what is the compliance requirements for the economic substance regulations. We know the deadline is arriving. 31st December 2023 is the deadline for the notification or for the reporting, as whatever is the case. So our table of contents, whatever we are discussing today, we are discussing economic substance. What is economic substance? What was the reason of implementations of economic substance? We're discussing a scope of economic substance regulation. In the scope, we'll discuss definition, licensee, and relevant activity. We'll see compliance requirements, specifically notification, ESR test, and reporting requirement. We'll go through implications of non-compliance way forward. At the end, we will have a question and answer sessions. Economic substance. The core objective of economic substance is basically whatever a transaction is being made, there's a commercial sense, there's economic reason, there's substantial real economic purpose behind this. This is the core doctrine of the economic substance. Basically, wherever you have the transaction, wherever you have the income, you must have the commercial reason, a substantial real economic purpose. There is a possibility that there is a possibility the company doesn't have the economic substance, but the companies are booking the revenue, making the transaction just to the tax planning. The core objective of issuing the economic substance regulation is to discourage such practices, to make sure that behind every transaction there is a genuine commercial reason and real economic purpose behind this. So this was the core objective of issuing economic substance regulations. Reason of implementation, there are two words. These two words are very important. One word is base erosion, a second is the profit shifting. Base erosion and profit shifting is basically shifting the profit from the high tax jurisdiction to the low tax jurisdiction. The profit is being piled up in the low tax jurisdiction so that the company needs to pay lesser tax. There are two possibilities to achieve this objective. One possibility is that in the low tax jurisdiction, you are increasing the sales or you are decreasing the cost. At the end, it will have an impact on the profit. It will decrease the profit. Second possibility, in the high tax jurisdiction, you are decreasing the sales or you are increasing the cost. At the end, you will have a decrease in profit. The core objective, basically, what the companies, multinationals or other companies usually doing here, basically tax planning. During a tax planning, they are reducing their taxable profit in the high tax jurisdiction, increasing the taxable profit in the low tax jurisdiction to have the lower impact of corporate tax. Now just look into this example. So this concept, basically base erosion and profit shifting, this is called shifting the profit from the high tax jurisdiction to the low tax jurisdiction. As per the number provided by the Economic Organization for Economic Cooperation and Development, there is loss of revenue. The loss of revenue is 140 billion annually. There is a loss of revenue. The profit is being shifted, basically, which has an impact on the tax. To avoid this, basically, the shifting of the profit, different strategy has been implemented. One of them is a economic substance regulations. So just look into this example that high interest rate loans are being granted to a company which is based in the high tax jurisdiction to lower the taxable profits. The company which is based in low tax jurisdiction, that company is issuing the loan to another company which is based in the high tax jurisdiction. So what will the impact? If the low tax jurisdiction company is giving the loan to the high tax jurisdiction company, means the cost in the high tax jurisdiction will go up and the revenue in the low tax jurisdiction will go up. So this is just look an example. This is a fair basically situation. In this, they are paying tax of 200,000, 50 plus 150,000, 200,000 is the tax. Now this company this is low tax jurisdiction. This company has given loan to the company which is in the high tax jurisdiction. The interest income is 300,000. 300,000 has become a cost here. Now the taxable profit has been reduced on overall basis. When the taxable profits are same, but the profit has been shifted from the high tax jurisdiction to the low tax jurisdiction. Here you can see the taxable profit in the high tax jurisdiction was 500,000. When the interest has been booked in the books of B Limited, now the taxable profit are 200,000. Out of this, 500,000. 300,000 has been shifted from the high tax to the low tax jurisdiction because one transaction has been executed for the loan. The company A, which was in the low tax jurisdiction, that company has given loan to the company, loan to the other company, which was in the high tax jurisdiction. Due to this, the profit has been shifted from the high tax jurisdiction to the low tax jurisdiction. In the same way, initially both of the companies were paying tax of 200,000. Now you can see the companies are paying tax of 140,000. The differential is 60,000. So just executing one transaction, the profit has been shifted from the high tax jurisdiction to the low tax jurisdiction, and the company has saved tax of 40,000. So to just discourage such practices, different bodies across the globe, like Organization for Economic Cooperation and Development, they brought one concept, BEPS, Base Rate and Profit Shifting Action Plan. This action plan was endorsed by the G20 countries. Then finally, UN involved, European Commission involved. The BEPS action point, the 15 BEPS action points was endorsed by the G20 country, recommended by UN, European Commission. Finally, these 15 action points was implemented in the respective member countries of the OECD. These 15 action points, these are the one that you can see the tax challenges, 2, 3, limitations, 5th, harmful tax practices, prevention of tax treaty abuse. These are 7, permanent establishment. Transfer pricing is basically 8, 9, 10, 3 action points in the TP, BEPS data analysis. These are 15 action points. And for the every member country of the OECD, they were supposed to implement a minimum 4 action points. These 44 action points were supposed to be implemented. Minimum 4 action points were supposed to be implemented by the member countries of the OECD, and the ESR is falling under the harmful tax practices. How to counter the harmful tax practices? UAE, being a member of the OECD, so they brought cabinet decision, revised cabinet decision 57 of 2022. They brought new guidance as well. So the core objective was basically to implement the minimum 4 BEPS action points. So we can summarize what was the reason of implementation of ESR in the UAE. There was a loss of revenue due to the BEPS base rate and profit shifting 240 billion dollars. Revenue was being basically revenue loss. The tax evasion was there, and the 15 action points were endorsed were given by the OECD, which was recommended by G20 countries. Out of these, 4 action points was required to be implemented by each member country of the OECD. And addressing the harmful tax practices, ESR is a part of the addressing the harmful tax practices, which is the point number 5. Then economic substance is the part of harmful practices. UAE new cabinet decision was introduced 57 of 2022. And new revised guidance was introduced as well, which was 100 of 2020. So this was the reason. Objective is basically where there is the revenue, where there are the expenses, it needs to be booked in the respective jurisdiction. There should not be anything like this. If there is no commercial substance, but the revenue is being booked, or there is no commercial substance, expenses are being booked or shifted, the core objective, expenses and revenue, is being booked in the respective jurisdiction, and where there is a commercial reason behind this, economic reason behind this. The scope of ESR, then the scope based upon scope of ESR as discussed in the cabinet decision 57 of 2020. If the licensee earns relevant income from a relevant activity, if the licensee earns relevant income from the relevant activity, so if the licensee earns relevant income, these two words are very important. What is relevant income and relevant activity? What is the licensee? Is the third most important word. So licensee, we need to look into this, what is licensee. Then we need to look into this, what is relevant income. Then we discuss what is the relevant activity as well. So the overall, what is the summary? What is the crux of the cabinet decision 57 of 2020? They said if the licensee earns relevant income from a relevant activity, then the licensee is liable to submit the notification within 6 months from the end of the relevant financial year, then the licensee is liable to satisfy the economic substance test, and licensee is liable to submit the report within 12 months from the end of the relevant financial year. So this is the crux of the cabinet decision 57 of 2020. I'm repeating, if the licensee is earning relevant income from the relevant activity, licensee is liable to submit the notification within 6 months from the end of the relevant financial year. They are liable to satisfy the ESR test. Then at the end of the 12 months from the end of the relevant financial year, before that they need to submit the ESR report as well. Now the question arises, what is licensee? What is the relevant activity? What is the relevant income? So licensee, a lot of other definitions have been given. You can go through these definitions in the respective cabinet decision: investment fund, M&A group, unincorporated partnership, relevant income, connected person, group, national assessing authority, branches, decision and management, direction and management test, consolidated financial statement, parent company, ultimate beneficial owner. But I'm jumping directly to the licensee. Who is a licensee? Because the definition of the law says if the licensee is earning relevant income from the relevant activity, then licensee is liable to comply the ESR. So what is licensee? In the cabinet decision 57 of 2020, licensee means any of the following two entities. Juridical person, we know who is the juridical person. Juridical person, or they said juridical person, legal entity incorporated inside and outside the state, or unincorporated partnership, no legal personality, registered in the state, including in the free zone, out of the free zone. So this is a licensee. Licensee, juridical person. Who is juridical person? Limited liability company, public joint stock companies, public shareholding companies, legally registered foundations, legally registered partnerships, unincorporated partnership. They said this licensee. This licensee, but there are some exceptions to this licensee. That these parties are exempt from the ESR. We know licensee. Now basically any juridical person on the overall say, on the macro level say, any juridical person is a licensee. So licensee, there are some exempted licensee as well. The licensee that is investment fund, it will not be subject to ESR. Licensee that is tax resident in a jurisdiction other than a state, it will not be subject to ESR. Licensee and a group which is only operating within the UAE and ownership of the group is also in the UAE, and the company doesn't have any connection with the M&E, not part of the multinational group, it will be exempt from the ESR as well. The entity which is being the income of being taxed out of the UAE, it will be out of the scope. It will not be subject to ESR. Sole proprietorship will not be subject to ESR because the sole proprietor is not a juridical person. This is a natural person. There no difference in between individual. There no difference in between individual and the sole establishment. The sole establishment will not be considered exempt licensee as well. So the important thing is basically any juridical person, unincorporated partnership, which are registered in the UAE, it will be considered licensee, but there are some exemptions related to this that we have discussed. So if I'm asking, this chart is very important. It will give you comprehensive understanding that which parties are subject to ESR, which parties are not subject to ESR. The first of all, ESR, natural person is not subject to ESR, straightforward. Natural person, sorry, let me shut down this WhatsApp. Sorry. Sorry. So ESR, we have discussed this. Natural person are not subject to ESR. Okay, natural person are not subject to ESR. Natural person, then juridical person, then unincorporated partnership registered in the state, these are subject to ESR. Now, the juridical person, Not carrying out any relevant activity means any LLC company or public joint stock company, this company is not carrying out any relevant activity within the UAE. The company will not be subject to ESR. So what are the relevant activity we'll discuss in our coming slides. So if the juridical natural person, we have already eliminated natural person will not be subject to ESR. Now the juridical person, if the juridical person are not carrying out any relevant activity, juridical person will not be subject to ESR. Now we are discussing that juridical persons are carrying out a relevant activity means it will be a licensee in the eyes of the law. So if the juridical persons are unincorporated registered partnership is carrying out any relevant activity within the UAE, it will be considered licensee. We have discussed there are two categories. One is the exempted licensee, which are these are exempted licensee, these are not exempted licensee. If the juridical person is an exempted licensee, then law requires they need to submit the notification only and sufficient evidence for being exempted. In case of non-compliance, such licensees will be treated like a normal licensee. So exempt licensee needs to submit the notification. If they are not submitting the notification, then it will be considered full-fledged licensee. Now the licensee, the non-exempted licensee, this non-exempted licensee, which is licensee as per law, relevant income is divided. There might be, there is a possibility one company in their business license, there is an activity, the company is doing this activity, relevant activity, but actually the company is not doing any relevant activity, or the company is doing relevant activity, the company has not earned any income from the relevant activity. If the company has not earned any income from the relevant activity, then the law said they need to submit only the notification. They are not subject to ESR test. They are not liable to submit the report as well. So if this is a licensee, which is not an exempted licensee, they are generating income from their relevant activity as well, then they are liable to submit the notification. They need to satisfy the ESR test. They need to submit the report as well. So if you will go this stream straightforward, you can see here that juridical persons carrying out relevant activity, earning relevant income, then they are liable to submit the notification, satisfy the ESR test, and submit the ESR report as well. So branches, if the one company has thousands of branches in the UAE, one company have 100 branches, so ESR will not be applicable on each branch. ESR will be applicable on the respective at the headquarter or the holding company. If the company has any branch, if a company has a branch out of the UAE, that branch is being taxed out of the UAE, then it will not be subject to ESR. If this branch is not being subject to tax out of the UAE, then it will be subject to ESR in the UAE. In the same way for the foreign entity, if the entity is outside, branches are outside, it will not be subject to ESR. If the foreign company has branches within the UAE, then we need to look into if this branch is being taxed out of the UAE or not. If this is income of the branch is already being taxed out of the UAE, then that branch will not be subject to ESR. Otherwise, it will be subject to ESR. The important thing that if the branch, any tax is being withheld, it will not be considered that the branch is being subject to tax. So exchange of information, how the information flows in the ESR, information flows from the licensee to regulatory authority, licensee, regulatory authority, national assessing authority. This is the flow of the information. In this flow of the information is flowing from the licensee, regulatory authority means the national assessing authority, then Ministry of Finance, then foreign competent authority. There are around 36. These are the regulatory authorities with whom the licensee is coordinating, submit information to respective authority. Then this authority information is going to the next FTA is given to the ministry is given to the foreign competent authority to exchange of the information, because this is the requirement. Now we have discussed licensee. We have established that licensee, the juridical persons carrying out the relevant activity. If the licensee is not carrying any relevant, if the juridical person is not carrying any relevant activity, they will not be subject to ESR. If the juridical person is carrying out relevant activity, it will be considered licensee. There are two possible: exempted licensee, non-exempted licensee. If exempted licensee, still they need to submit the notification. Non-exempted licensee, if they are not earning any, If the exempted licensee, they need to submit the notification. If non-exempted licensee, if they're not generating any revenue, still they need to submit the notification. If the non-exempted licensee is conducting relevant activity, generating relevant income, then they need to submit a notification, satisfy the ESR test, and satisfy the report as well. So we know what is a licensee. Going back to the basic definition, we're talking what was the crux of the discussion. If the licensee is conducting any relevant activity, from there it's generating relevant income, then they need to do three things. So we have decided what is licensee. Now, relevant activity. In the law, they have given 9 relevant activities. These are the 9 relevant activities. First of all is the banking business, insurance business, lease finance business, headquarter business, investment fund management services, shipping services, intellectual property business, headquarter business, holding company business, and the 9th one is sales and distribution business. So we'll discuss one by one at the very high level. So banking business. Banking business, any entity which is accepting deposits and giving loans, advances, overdraft, it will be considered the entity involved in the banking business. Two conditions are very important. The entity is accepting deposits, then giving loans, advances, overdraft, guarantee, making investment from those deposits. It will be assumed that the entity is involved in the banking business. So if the entity is not accepting the deposits, or accepting deposits and not giving loans, or giving any bank account related services, it will not be assumed that the entity is involved in the banking business. This is important. The entity involved both of the things, accepting deposits, giving loan advances, or making investment, they're utilizing the money as well. Then it will be assumed that the entity involved in the banking businesses. If there any financial intermediary, they said ESR will not be applicable on the intermediaries. So just look into these examples. I have taken these examples from the relevant guide. In the first example, the bank offers saving account and loans, means saving account, bank is taking deposits and giving loans as well. Yes, the entity involved in the banking business. In the second, branch bank has license to accept the deposits. The bank is accepting the deposit. The bank is not giving loans. So it will not be assumed that the bank is involved in the ESR. The bank is doing the relevant activity. In the third category, branch of a bank only provide assistance in the account opening and advice, means branch is not accepting deposits, means not giving loans, then it will be assumed that the branch is not doing the relevant activity. Next is the insurance business. For the insurance business, the important thing is the insurance business, the entity is accepting risks, signing contracts, and both in the life and non-life sectors, accepting risk, signing contracts in the life and non-life sector. So it can be insurance contracts, reinsurance contracts, captive insurance contracts. So if the entity is accepting risk, signing contracts in the life, non-life insurance, that will be assumed the entity is involved in the insurance business relevant activity. Otherwise, it will not be considered a relevant activity. Captive insurance is usually the owners of the business. Owners are usually setting up the insurance company. The company is that protecting the interest or the risk of the only owner. This is called captive insurance. Again, any brokers, agents, or other businesses, it will not be considered that they are considering the relevant activities. Just look into this example. In the first example, insurance company accept risk and is a regulated insurance company. Then it will be assumed the company is involved in the insurance businesses. The company is in insurance company accepting risks. In the second category, company is acting as an intermediary. We have already discussed intermediary will not be subject to ESR. This entity will not be subject to ESR. Third category, investment fund management. We all know this investment fund is a different thing. Fund management company is a different thing. There is a possibility the same company is managing the funds as well, but usually investment fund is a different thing. Investment fund management service are different services. Now the party might be the company supporting different other relevant activities. So as per the ESR, if any company or any business is providing discretionary investment fund management services, it will be subject to ESR. Otherwise, it will not be subject to ESR. I'm repeating, if any fund management company is providing discretionary investment fund management services, then it will be subject to ESR. Otherwise, it will not be subject to ESR. So what is discretionary investment fund management? So in the discretionary investment fund management services, the fund managers are taking decisions without the consent of the customers. So if the investment managers managing the funds, they are taking decisions without they are taking investment decision, they are taking investment decision of fund decision related to the sub funds without the consent of the owners or without the consent of the client, then it will be considered the company is involved in the relevant activity. So any services like fund manager, custodian, investment advisory services provided to the fund or fund related services, it will be all considered ancillary services, supporting services. It will not be subject to ESR. Only discretionary investment fund management services will be subject to ESR. Otherwise, the rest of the things will not be subject to ESR. Just look into this diagram. Investment fund management services might be the non-management services like fund administration, custodian, investment advisory, and other services. It will not be subject to ESR, straightforward. Management services, investment fund management services, now they are providing making investment a risk-related decision. Now there is a possibility they are taking non-discretionary investment management. If the fund manager is taking non-discretionary investment management services, then it will not be subject to ESR. And if the fund manager is taking decision without the consent of the client, means fund manager is providing discretionary management services. If the fund manager is providing discretionary fund management services, then such services will be subject to ESR. Just look into this example. T fund is an investment fund. In this fund, you can see one company is providing sports services, one company is providing non-discretionary services, one company is taking discretionary investment services. So discretionary investment, they said MLLC investment manager 2021 is considered a carrying investment fund management because MLLC is taking discretionary investment management services. NEO does not provide discretionary investment management services. It will not be subject to ESR. TLLC is providing support services on the basis it is limited being the general partner of Trinity discretionary investment fund services delegated to MLC. Administration services, administration of the fund is handled by the third party, so it will not be subject to ESR. So this administration will not be subject to ESR. This non-discretionary services will not be subject to ESR. MLLC providing only discretionary investment management services, it will be subject to ESR. Lease finance business, very important, very common. This is almost applicable on every second entity which is part of the M&E group, because there's some sort of financing, some sort of cash pooling, some sort of loan arrangements, lease finance. So this is very common. This is applicable. So basically, lease finance businesses, if one company is offering credit or financing of any kind with consideration, it will be subject to ESR. It will be considered the company is involved in the relevant activity. If the company is not providing these services, that it will not become the company is not providing the relevant activity. So making loans to related and unrelated party, it doesn't matter you are making loan within the group or out of the group, or financing in the group, out of the group, other than land financing, any part of credit or any type of cash pooling arrangement where they are getting certain percentage in the form of consideration, then it will be assumed that the entity is involved in the lease finance business. If the entity is not getting any consideration, then it will be assumed the entity is not involved in any lease finance business. The company will not be subject to ESR. So investment in bonds or similar security that has already been traded at stock exchange will not be considered a lease finance business. Just look into this example. In the first example, STU, loan to subsidiary with 10% interest. The company is taking 10% interest. Loan is being provided, financing is being done, consideration is being received. Yes, it will be subject to ESR. In the second category, assigning loan without interest. STU is giving loan to any other company, doesn't matter within the group or out of the group. The company is not taking any consideration for these loans. It will not be subject to ESR. Trade LLC, normal payment term 45 days, late payment interest. Late payment penalties these are the penalties. This is not financing. This is not granting loans. Late payment interest. So principally should not be subject to ESR. Just we can read trade company sells office supplies and allows its customer 45-day payment terms on invoice. If the customer don't pay within 45 days, company charges late payment interest. This trade credit arrangement is not a lease finance business. Yes, this is not a lease finance business because you are applying penalty. You are not being paid on time. You are applying penalty. This is not a lease finance business because you are not intentionally financing them. And 45 days credit is a normal credit. If you go into the definition, making loans to related and unrelated parties, entering financially in relation to assets other than land, providing credit in the form of hire purchase agreement, long-term credit plan, long-term credit plans. Long-term credit plans are subject to ESR. Short-term plans are not subject to ESR. If your 45 days credit is being given, if the 45 days credit is being given, for sure it will not be a long-term plan. It will not be subject to ESR. In the last one, treasury company, cost to cost financing, but treasury company to a group company. It doesn't matter. You are doing cost to cost, below cost, above cost, and then you are getting interest or not. This is you are getting consideration or not. If you are not getting any consideration, it will not be subject to ESR. Treasury company is part of the JBR group, acts as the central treasury center for the group. Treasury company and okay, offering funder, treasury company not applying a markup on the interest, not applying a markup being charged. It offers a financial group company for consideration, thus consideration to carry on the lease finance business. So it doesn't matter if you're taking, if the corporate head office, corporate office is taking a loan from the bank at 10%, giving it at 10% to the subsidiary, doesn't matter. And then you are paying consideration, giving consideration. Whatever you are paying to the bank, this is not your matter. Important thing you need to understand, are you being paid any consideration for the financing? Yes or no? If yes, you will be subject to ESR. Headquarter business, in the headquarter business, the straightforward definition, if the business is responsible for the overall performance or success of the group, of a foreign group company, it will be subject to ESR. Otherwise, it will not be subject to ESR. I'm repeating. If the business, it doesn't matter, holding company, subsidiary, any other part of the group, any other company of the group is responsible for the overall performance or success of a foreign group company, it will be assumed that the entity involved in the headquarter business. So whenever there will be responsible, senior management will be involved. They will be setting direction, giving control, monitoring, taking risk, giving advice. So all these functions, whenever they are performing, it will be assumed that the company is responsible for the overall performance and success. Then if the company is responsible for the overall performance and success of the group, it will be assumed the company is involved in the headquarter business. You can see here the two different examples. You can go through these examples. In one example, groups, multinational group, we need to look at which company is responsible for the overall performance and success. The company which is responsible for the overall performance and success, it will be assumed the company is involved in the headquarter business. Shipping business, the shipping business is very chartering of the ship is subject to ESR, ownership of the ship, leasing of the ship, sorry, operating of the ship is subject to ESR. Ownership of the ship, leasing of the ship is not subject to ESR. Chartering of the ship, ownership is not subject to ESR. Chartering of the ship is not subject to ESR. Operation of the company which is providing the company which is operating the ship, only that company will be subject to ESR. Owner of the ship will not be subject to ESR. And the company which is giving the ships on lease or on chartering the ship, that company will not be subject to ESR. Important thing is who is operating the ship. Whoever is operating the ship, that company will be subject to ESR. So this is chartering a ship, bareboat buses will not be subject to ESR. If the ship is given chartering, it will be considered lease finance business. It will not be considered shipping business. The important thing, as I mentioned, chartering of the ship will not be, ownership of the ship will not be, operations of the ship will be subject to ESR. We need to look in who is operating the ship, and the middlemen like travel agencies, international shipping agencies, it will not be considered that these are providing the shipping business. If the same company is providing the same services, which is operating the ship, and the company is providing the services, ticketing services, crew management services, then it will be part of the shipping business. Just look into this example. Just look into this example. In the first category, operate ships from UAE to GCC countries. Operation of the ship, yes, subject to ESR. Only crew management services, it will not be subject to ESR. Charter LLC, chartered cargo, chartering, it will be lease finance business, operation will be subject to ESR. Holding company business, if one business is making investment in the equity or equitable interest, and from there they are getting income in the form of dividend or in the form of capital gain only, making investment and getting income in the form of dividend or capital gain, then it will be subject to ESR. It will consider the company involved in the holding company business. If they are getting any other income along, might be there is a possibility one company, the holding company, other than this, they are getting income from any relevant activity, any non-relevant activity. So it will be assumed that the company is doing the relevant activity, relevant business. Basically, if the holding company making investment in the form of making investment in the equity, equitable interest, and getting income in the form of dividend and capital gain, nothing more than this. So if they have investment in this category and getting income from dividend capital gain, it will be assumed this is the relevant activity as holding company activity. If they're conducting any other relevant activity, then it will be assumed that the company is doing that relevant activity. And if the company is making investment in dividend and capital interest along with in equitable interest, along with this, they are conducting any non-relevant activity, then it will be assumed that the company is not involved in any relevant activity. So for the holding company, the reduced economic substance requirement we'll discuss in detail next time. So holding company, just look into this example. This is the holding company investment in equity, only investment in equity, holding company business, investment in equity, other relevant activities. So it will be, we need to look at the other relevant activities, high risk intellectual property business or normal. If high risk, then it will be the high risk intellectual property business. If normal, it will be considered this is a normal ESR. Their investment in equity and non-relevant activity, either discuss, it will be assumed the company is not doing any, it will not be subject to ESR. Just looking at the company only getting dividend in the form of subsidiaries, just the company is doing the relevant activity, holding company business, holding shares and conducting non-relevant activity, it will not be subject to ESR. Holding shares and giving loan, holding shares and giving loan, the company is giving loans, a lease finance business, so it will be assumed the company is doing in the lease finance activity. In this company acting as a trustee, if the company is acting as a trustee is not a relevant activity. Holding company is acting as a trustee, so it will be assumed the company is not doing any relevant activity. Intellectual property business, 8th one. Intellectual property business means if the licensee is getting a relevant income from the intellectual property asset, then it will be assumed that the licensee is in the intellectual property business. Now, it depends what type of asset it is. So if the asset, there are two types. One is high risk intellectual property business, and the second one is a normal intellectual property business. The different requirement for the ESR law for each business. So initially we can say if the licensee is conducting relevant activity, is getting any income from the intellectual property asset, then it will be assumed the licensee is involved in the intellectual property business. So intellectual property assets, these intellectual property assets, we know what are the intellectual property, patent, copyright, all these things, income in the form of royalties, intangible assets, leasing and capital gains, all these things. This is important. Are you in the high risk intellectual property business? Are you not in the high risk intellectual property business? So important thing is if the licensee has not created the intellectual property asset, but taken this asset from the group entity or funded the asset, research and development has been conducted out of the UAE, then bought that asset. And after taking this asset, the licensee has given this asset to any connected persons or to any foreign group company, then it will be assumed that the licensee is involved in the high risk intellectual property business. I'm repeating, licensee, first of all, licensee has not created the asset. Second, they have taken the asset from the group company, or they have funded the research out of the UAE. From there, they have taken the asset. Means they have taken the asset and they have not created the asset. This asset is being given, intellectual property asset, this asset is being given to any connected person or any foreign group company, then it will be assumed that the licensee is involved in the high risk intellectual property business. So other than this, it would be assumed non-high risk intellectual property business. Income is separately identified. These are some basic conditions. Basically, if you have a right in intellectual property, as from this you can gross income. If the income is not separately identifiable, then it will be assumed that you are not in the high risk intellectual property business. If the income is identifiable, then it will be assumed that you are in the intellectual property business. I'm repeating. If the income cannot be identified from the intellectual property asset, then you will assume that you are not in the intellectual property business. If the income of the intellectual property asset can be identified, yes, you are in the intellectual property business. The intellectual property business, it can be high risk intellectual property, it can be normal intellectual property business. Non-high risk IPB holding brand and earning separately identifiable income. Holding brands. Company holds a brand, a right for which a license to other in the return for other already companies within the scope of intellectual property business. Yes, they basically rights, they have given the right. They're not asking, they have given right to a group company or to a connected person. In the second, holding trademark, from the trademark, you cannot identify the separately identifiable income, so it will not be subject to ESR. Non-high risk can be holding IT software and earning separately identifiable income. IT software, you are not taken it from the group company. They are asking, developed the software. It means you are not acquired, but developed the software. It will be considered normal intellectual property business. Pharma, high risk into basically they are asking how you, a resident company, earns the gross income from licensing is patent from a new medicine to a group company. This is being given to group company located in Egypt and KSA. Pharma Corporation did not create the patent. Now they have not created. They have taken it from the group company, giving it to the group company, high risk intellectual property business. Distribution and service sector, if you are buying the goods from the connected person, selling anywhere across the globe, it will be considered distribution business. And if you are exporting services to your group company out of the UAE, it will be considered service sector business. If you are providing one-time services, it will not be subject to ESR. You can go through this example, buy furniture from the group company and sells. Yes, it is the distribution business. Export services to a group company. Yes, this is service sector business. UAE entity recharge KSA group company for one-off service. One-off services, it will not be subject to ESR as we have discussed earlier. There, duplication reporting, you can go through this. If you are doing banking business, you are not liable to do reporting in any other sector. All will fall under the banking, but income will be merged. If you're doing insurance business, the duplicate reporting licensee provide captive insurance services, it will not be considered separate business. It will fall basically distribution and service sector business. So it will be considered the licensee providing captive insurance business. You can go through this, your duplicate reporting. You need to avoid the duplicate reporting and you need to report the revenue under the main entity. ESR compliance requirements. The time is already over. Okay, we can take half an hour more. ESR compliance requirements. ESR compliance, as we discussed, if the licensee is earning relevant income from the relevant activity, then the licensee is subject to ESR notification, ESR test, and ESR reporting. Notification, they need to submit within 6 months from the end of the relevant financial year. This is 6 months from the end of the relevant financial year. The notification format is, you can go through this format. I taken a screenshot from the FTA, from the respective side. This is a notification format. You need to fill the information, submit it. You are not liable to provide any numbers in the notification, but the basic information you need to provide. Now, compliance requirements. What are the ESR compliance requirements? Oh, if the licensee is doing relevant activity, earning relevant income, licensee is subject to ESR test as well. So there are 3 major categories. One is a functional test, management test, adequacy test. They need to satisfy all these tests, otherwise licensee will be considered non-compliant. It will be subject to penalties. So functional test. In the functional test, the SIGA, core income generating activity. The important thing is where this SIGA are being conducted. For the other than holding company, all licensee is compulsory. It is compulsory for all licensee that they need to conduct the SIGA within the UAE. If this is being outsourced, then the party to whom these are being outsourced, this party must be within the UAE. So core income generating activity other than the holding company, SIGA should be in the UAE. Management test, will discuss the management test as well. Adequacy test, will discuss the adequacy test. The first of all is, these are the core income generating activities for the banking business, insurance business. These are the various activities, SIGA activities. For each relevant activity, I mentioned the SIGA activities here. You can go through all SIGA activities, core income generating activities. So for the holding company, I discussed there are three different types of requirement: reduced economic substance requirement, full or enhanced. Enhanced if the holding company is conducting holding company business plus high risk intellectual property business. Full if the holding company is conducting any relevant activity other than holding company. Then reduced if the holding company is conducting only holding company activity, means making investment in the form of equity in the equity and equitable interest and getting income in the form of dividend or capital gain. Then it will be assumed that the licensee is conducting only holding company business. If the licensee is in the holding company business, then they said SIGA will not be applicable. Deduction and management test will not be applicable on such licensee. Adequate employee test, yes, it will be applicable. Adequate expenses test, it will not be applicable. Adequate assets test, yes, it will be applicable. Here full, everything will be full. Here full, everything will be full. But here in the enhanced economic substance test requirement, it will be assumed that the licensee has not satisfied the ESR test. They will have to provide the information along with the notification, along with the report. SIGA outsourcing, as I discussed, SIGA can be outsourced. For holding company, this is not applicable. SIGA can be outsourced. Other businesses can outsource the SIGA, core income generating activity. If these are being outsourced, the party to whom these are being outsourced, these party must be based within the UAE. These party must have adequate employees, adequate asset, adequate employees. They are satisfying the direction management test. Moreover, these SIGA activities are being supervised by the licensee. So if these all conditions are being fulfilled, then it will be assumed that the SIGA has been satisfied. For the otherwise, it will be assumed that SIGA has not been satisfied. Management and direction test. This is the second. First, we discussed SIGA. Now we're discussing direction and management test. In the direction and management test, they are asking meeting. Meeting should be in the UAE. Board should be in the UAE. Once in a year, there should be management meeting. Adequate. If it has been given to responsibility has been given to anyone in the UAE, then that person must have, it will be assumed that board is here, meeting need to be here, that person is representing the board, that it will be assumed that the meeting criteria has been satisfied. They need to be, then they're asking board meeting physically present here. This is the all requirement for the meeting. Minutes should be maintained. All strategy or decision should be documented. The director, they must be capable to discharge their responsibilities. If all these conditions are being satisfied, then it will be assumed that the licensee has satisfied the direction and management test. Keep in mind, this direction and management test is not applicable for the holding company business. This is an adequacy test, adequate employees, adequate operating expenditures, and adequate physical assets. And the party to whom this is being outsourced, this party must have the adequate employees, adequate operating expenditure, and adequate physical assets in the UAE. In the holding company business, this adequate employee test is applicable, adequate expenses test is not applicable, adequate assets test is applicable as well. ESR, if this is non-compliance, if the FTR, the respective authority wanted to do the audit, they can go back up to 6 years. They can conduct the audit, but they can go beyond 6 years as well if they believe there is a gross negligence, fraud, deliberate misinterpretation. Then ESR reporting requirement, you can go to the ESR reporting requirement as well. In the notification, we need to submit. In the notification, we need to submit a basic information without the numbers. But in the reporting, we need to provide the numbers as well. That will be containing the information related to the ESR compliance test. How many meetings? How much revenue? Do you have the minutes? Board was present. All this information we need to provide during the reporting. So this is the reporting requirement. They are fetching the basic information from the notification. They are supplementing this further with the rest of the information. So general information, branch detail. This is, again, I have taken a screenshot for the reporting. You can go through this, the license registered or not. Then they are asking relevant activity, commercial license. These are basic information from. Then they are asking updated information, financial information. This financial information is not required at time of submission of notification, but at the time of submission of report, yes, this financial information is required. Audited financial statement reportable, available, currency used, total revenue from the relevant activity, accounting profit from the relevant activity, net book value. I think this, yes, this is on total level. Now next they are asking relevant activity. Which business? Banking, insurance, intellectual investment, fund management, for lease finance business. Lease finance business, leasing or financing, they have separate categorized headquarter business. Then we need to provide all this relevant information along with the income. After providing this information, now they are asking further information. These further information: ownership, name, tax identification number, addresses, tax residence. Again, outsourcing information. I have already discussed you can outsource it, but if you are outsourced, are you supervising? Is the party to whom you are outsourcing, they have sufficient resources, sufficient expenses, adequate assets, adequate employees? This is all information related to the licensee, to the party to whom you have outsourced your functions. Then there are direction and management tests, number of board meetings, because this is a requirement of the law. You need to have at least one board meeting. Number of board meetings held in the UAE during the reporting period. What the quorum was present there. Do you have the minutes, strategic decisions, board meeting minutes? All this is exactly the same requirement, whatever we have discussed during the compliance requirement. You need to satisfy the ESR test. To satisfy the ESR test, we discuss three things. What are these three things? First thing, direction and management test. Second thing, first thing, direction and management. First thing, SIGA. First thing is the core income generating activity test. You have the core income generating activity within the UAE, or you have outsourced to a party to whom you have outsourced. That party has the sufficient all information in the UAE. SIGA. First is you need to satisfy the SIGA. SIGA is not applicable for the holding company business. Second thing, you need to satisfy the ESR, direction and management test. In the direction and management, they are asking meetings. Director should be capable, responsible, and minutes of the meeting. And third thing, they are asking adequacy test, adequate assets, employees, and resources. So all information, whatever you need to do during the whole period, you need to report it at the time of reporting. Then declaration, you need to give declaration. Implications of non-compliance. Implications of non-compliance: fails to submit notification. Penalty is only 20,000 dirham. Fails to submit a report. First report, 50. Next, immediate subsequent year, 400,000 the penalty. Fails to satisfy ESR test. First, 50,000. Second, 400,000. Intentionally provide inaccurate information or fails to inform where it is 50,000. Persistence, non-compliance, your license can be cancelled as well. Way forward, what I suggest you, basically what we suggest you, book over impact assessment to assess, are you subject to ESR or not? Then you need to, if you are subject to ESR, you need to submit the notification. Then you need to assess, are you earning any relevant income? Yes. If you are earning any relevant income, then you need to go for the ESR compliance requirement. After doing the ESR compliance, then you need to submit the report as well within the due date. We are always here we are ready to listen, understand, and deliver. If you have any question, you can drop us an email, and you can give us a call as well. So you are most welcome if you have any question. Wakar is saying very useful session. Thank you. Thank you very much. I really appreciate it. If you have any question, you are most welcome. No question? How do we handle ESR if shares held by BVI company? If shares held by BVR company, if the shares are held by BVI company, then ESR is applicable on the BVI company, not on the UAE company. BVI company will be subject to ESR because ESR applicable in the BVI as well. And we are already supporting a lot of businesses there in the BVI. If you are in need of any support in the BVI, you can drop us an email at info@crestcooper.com, or you can drop me an email, or you can give me a call. It's fine. Another question. Thanks, Bravo. Have a great session. Thank you very much, guys. And have a lovely evening. I think it was a little bit long session. I tried to wind it up as soon as possible, but still, I think I was a bit late. Have a lovely evening. Thank you very much. Thank you being with me. Thank you. Bye-bye.
Subscribe to the YouTube channel.